Good morning. This is Dave Toth with an RJO MRT Technical Webcast update on the gold and silver markets for Monday, January 31st. Starting off here with a daily log scale chart of the gold contract that is now reflecting April contract prices as the most prompt month. You can see the broader sell-off over the past nearly 2 months now that maintains a generally but cautious bearish policy with strength above former support new resistance between the 1352 and 1354 area. We will say that the fact that this month's sell-off from a 1424 high back on January 3rd, the fact that it has spanned a length almost exactly 61.8% longer than early December's initial counter trend sell-off warns that this recent 1309 spot 10 low could be one of developing importance and quite possibly the end of a broader C wave of a major bull market corrective sequence. And indeed, you can see Friday's recovery, obviously due to the tensions in Egypt, as coming close to confirming a bearish divergence in short-term momentum above the 1349 latest and tightest corrective high from last Thursday. And in this 4-hourly chart of the April gold contract, you can see this very good area of former resistance, former support between the 1354 and around the 1354 area that really is the threshold that needs to be hurdled to not only confirm a bullish divergence in short-term momentum, but quite possibly on a larger degree scale that could re-expose the secular bull trend. By looking at the weekly log scale chart here, you can see the dominance and the magnitude of the long-term bull trend and the historically bullish sentiment levels that has produced that exposed at least an intermediate term correction we think the market is in right now, and in this correction we've targeted this outstanding area of significant former resistance from last June around the 1266 area that within the context of such a broader bull trend we'd expect to act as new support. But you can see the recent and relatively sharp erosion in both measures of market sentiment that we watch closely, the bullish consensus and our proprietary MRT Bullish Sentiment Index. Still very, with respect to the large spec bullish exposure reportable to the CFTC at 80%, that's still a whopping amount of bullish exposure that is in quite vulnerable to maybe a capitulation mode as these longs are now being hurt. But looking at the erosion in the bullish consensus to a 63% level, that's almost as low as that helped bottom the market out from the last correction last July ahead of the next major phase in the bull trend. So it's certainly possible that the market might be towards the end of a considerable bull market corrective sequence, but proof of strength above at least last Thursday's 1349 high and preferably above last week's 1354.5 high basis the April contract is required to increase the odds that 1309 low from last week is a sound and reliable low and quite possibly the end of a major bull market corrective sequence. One last thing we'd like to point out is the relative detach between gold, the inverse correlation between gold prices and that of the U.S. dollar. You can see there's virtually no correlation in this market over the past month, and in fact there might be given the way the U.S. dollar has been eroding over the course of this month, you can make a case that there's been a very positive correlation, but historically this market has had the gold market has had a solid inverse correlation for the U.S. dollar, but as this chart clearly shows, and as we typically advise clients, most relationships between two markets are not reliable. They do ebb and flow, and the gold-dollar market is a good example of such currently. In sum, a bearish policy, a cautious bearish policy, remains advised in the gold market. But again, we do believe that this, within the context of the secular bull trend, we believe this past couple of months setback attempt is a major bull market corrective sequence, and we're going to watch closely for a bullish divergence in momentum that could reestablish or re-expose that major bull trend, and we think gains above initially 1349 and preferably 1355 area will do that. Unfortunately, that might come at the expense of increased tensions in Egypt. Moving to the silver market, you can see the broader development of the past month's developing a larger degree correction or reversal lower, but by virtue of the past couple of days recovery, perhaps just to the neckline of a broader head and shoulders reversal pattern and an area of former support, new resistance around the lower 28 handle. We want to be watchful for, on this larger degree scale, this being merely a corrective market pop ahead of further erosion with respect to a larger degree correction or reversal lower. On this larger degree scale, we still define the January 19th high at 29.49 as perhaps this market's most important technical level. So that's the level the market needs to recover above to jeopardize the impulsive integrity of any broader bearish count and expose the January sell-off attempt as a three-wave and thus bull market corrective sequence that might re-expose the secular bull trend to new highs above 31.27. From a shorter-term perspective, you can see Friday's recovery above last Wednesday's 27.79 high, confirming a bullish divergence in short-term momentum that defines last week's 26.30 low as one of developing importance. For that's the low the market now needs to relapse below to reinstate at least this intermediate-term correction lower. By the same token, and as we discussed, the 29.49 high from January 19th is the level the market needs to recover above to re-expose the broader term bull trend. And the market's pretty much smack dab in the middle of these two directional keys, and while that's the case, a neutral sideline position is advised. Ahead of such a 29.49 plus breakout consistent with the broader bull trend, if end of last week's recovery is the start of a larger degree resumption of the secular bull trend, we'll be watchful for proof of three-wave corrective behavior, a labored relapse attempt to Thursday, Friday's recovery. And if in fact the market can survive that corrective bull flag pattern and then start to put pressure on Friday's 28.42.5 high, that'll be the type of behavior that'll reinforce a basing and reversal threat and re-expose that secular bull trend. So we'll be watchful, very watchful for that during the course of this week. For the time being, however, and as long as the market remains pretty much in the middle of the past couple of weeks, 29.49 to 26.30 range, a neutral sideline position is advised. And obviously, these two levels, 26.30 and 29.49, are key directional triggers for the next decent move in the silver market. Please stay tuned to updates on these and other markets on our RJOMRT.com website, and good luck with today's trade.